now two stock markets. Joining us now is Vital Knowledge founder Adam Crisafulli, and we've got Michael Santoli with us as well. What do you mean, Adam, two stock markets?
Well, you have this phenomenon over the last several years where the outperformance in these large tech companies, so Meta, Amazon, Apple, Microsoft, Google, has caused them to dominate the market. And so you have now the equal weight S&P 500 and then the normal market cap weighted S&P 500. And this week, up until today, but really Monday through Thursday of this week, you saw a very sharp divergence between those two indices, where the market cap weighted S&P was held down by the mega caps, and you had the normal equal weight S&P actually trade very well. That's reversing today to a certain extent, but it still is the case that the equal weighted S&P is having a little bit of a period of outperformance now.
What do you think is the big driver? Does it continue?
Yeah, I mean, I think, this week has been, the last several weeks have been a roller coaster. For me, the most important events that occurred in the market were, on Wednesday, you had Bank of Canada come out with a dovish hike. They hiked less than expected. And then yesterday, you had the ECB suggest that they're going to be slowing the pace of tightening. So for weeks, you've had this narrative start to seep into the market, whereby it looked like the central banks that were most aggressive earlier in the year with hiking are now coming to the end stages of that process. And so everyone assumes that the Fed now is going to be the next in line. We'll get 75 basis points next week. And it's widely assumed that there'll be some type of a signal sent by Powell that they'll be downshifting to 50 in December and then to 25 and 0 at the meetings thereafter. And that, to me, has helped to overcome the big headwinds from large cap tech earnings, which certainly did disappoint. So you have earnings estimates. Sorry, go ahead.
No, I just wanted to bring Mike Santoli in here because, Mike, it does feel like there have been hopes before that the Fed is going to downshift on interest rates. And every time the market gets excited about that, then something comes up like inflation is persistently high, or Powell and everyone else on the Fed is still very focused on controlling inflation.
No, there's no doubt we've been through the routine before. I think you could say right now, well, if nothing else, time has moved on. They've done more. They're going to be at about 4% on the upper end after next week's meeting on the Fed funds rate. That's not far from where they're essentially projecting they need to get to. So even just because of where we've come from and gotten to, you could say it's a little more plausible now to say they're going to decelerate in their hiking pace. That being said, you absolutely need inflation to cooperate here a little bit more before you can get real confidence that they're going to be able to step back in a big way. But the other piece of it is, even though it seems like the market's up a lot from the lows in a couple of weeks, I would argue that the reason the market went down in the first place, the S&P below like 3,800, is because you had a lot of fears that the wheels were coming off. What was going on in the UK, obviously the Bank of Japan having to intervene, China, all of these things seemed as if everything was teetering. The Credit Suisse's insolvent rumors, right, a couple of weeks ago, that was the low. And so I think that if you look at it that way, we probably shouldn't have gone down as far as we did based on the way the economy is and the Fed expectations are. It's a little more reasonable that we've gotten back to this point.